Good morning. It is Wednesday, January 14th, 2026. Welcome to the most confusing morning on Wall Street in a decade. If you look at the economic data, we just hit the jackpot. The consumer price index is cooling. Inflation is dead. The soft landing is technically here. But if you look at your bank stocks, it's a bloodbath. JPMorgan beat earnings, yet the stock is down 4%. Visa and Mastercard are being sold indiscriminately. Why? Because the market has realized that good data doesn't matter when the rules of the game are changing. President Trump isn't just celebrating the inflation data. He is using it as ammunition to fire the Fed chair. He isn't just criticizing credit card rates. He has the Speaker of the House investigating a 10% cap. So here is the conflict for today: the economic victory versus the political purge. The economy is fine, but the companies that run the economy, the banks, the chip makers, the logistics giants, are under siege. Do you buy the data, or do you sell the politics? This is the pre-market pulse, and we will see how the game play. Deep Dive 1. The banking bloodbath, JPMorgan, Visa, and the 10% CPI. Let's start with the lead, because the financial plumbing of the United States is being repriced in real time. Yesterday, we told you about the unholy alliance between Trump and the progressives on capping credit card interest rates at 10%. Today, that threat just went from campaign rhetoric to legislative reality. House Speaker Mike Johnson confirmed to reporters that Congress should investigate the proposal. He warned about negative secondary effects, sure, but he didn't shut it down. He opened the door. The market reaction. Look at Visa and Mastercard, both down nearly 4%. Look at Capital One and Synchrony, bleeding out. And then there is JPMorgan Chase. Jamie Dimon just reported a solid quarter. Revenue of $46.8 billion. They beat on EPS. They see the macro environment as positive. So why is the stock dumping? Two reasons. Reason one, the fees are gone. Investment banking fees fell 5% year over year. The deal-making boom everyone promised? It hasn't happened yet. The IPO market is sluggish. Reason two, the regulatory gun. During the earnings call, CFO Jeremy Barnum had to address the 10% rate cap. He said, quote, "Everything is on the table." He warned that if this happens, people will simply lose access to credit. Translation: if you cap rates at 10%, we stop lending to anyone with a credit score under 750. The takeaway: this is a massive sector rotation. Investors are fleeing financials, XLF, because the regulatory moat is turning into a regulatory noose. If the government dictates your pricing power, you are a utility, not a growth stock. Until the 10% cap legislation dies. If it dies, $V, $MA, and $COF are uninvestable. Deep Dive 2. The macro disconnect. Now, zoom out to the macro story. We got the inflation number everyone wanted. Core CPI rose just 0.2% month over month. Year over year, we are sitting at 2.6%. This is the green light for the Federal Reserve to cut rates. Bond yields fell across the curve. The 10-year yield dropped to 4.17%. But here's the trap. President Trump didn't say, "Good job, Jay Powell." He said, quote, "Soft inflation data warrants deeper Fed rate cuts." And he confirmed he will name his replacement nominee for the Fed chair within the next few weeks. The market is pricing in rate cuts, but it's also pricing in a constitutional crisis at the central bank. We have reports that the DOJ investigation into Powell regarding renovation costs is heating up. Powell released a letter proving he disclosed everything to Congress months ago, but the political train has left the station. The chip war confusion. And in the middle of this political storm, we have Nvidia. This morning, we have total confusion on the China trade. Report A. The Trump administration formally approved the sale of Nvidia's H200 AI chips to China, with conditions, 50% volume cap, security checks. This should be bullish. Report B. Reuters is reporting that China's own customs agents have been told not to let the chips enter the country. Think about the irony. The US finally says yes, and China says no. Why? Beijing might be retaliating against US tariffs, or they might be trying to force their tech giants, Alibaba, Tencent, to buy domestic Huawei chips. Either way, the semiconductor index, SOXX, is caught in a geopolitical pincer movement. Intel and AMD are rallying because they are less exposed to this specific border war, but Nvidia is stuck in purgatory until we get clarity. The silent mover, the chaos hedge, silver and oil. While the banks crash and the tech stocks fight over tariffs, the real assets are screaming. Silver just broke $90 an ounce. Gold is back near record highs. Why? Because when the president attacks the Fed chair and the speaker attacks the banks, where do you hide? You hide in things they can't print and can't regulate into bankruptcy. This is the debasement trade going mainstream. The market is betting that the only way to solve the debt crisis is to inflate it away, and silver is the highest beta way to play that. And don't look now, but oil, USO, is waking up. WTI crude hit $61. It's not exploding, but it's grinding higher. Why? Iran. President Trump posted on Truth Social telling Iranian protesters, help is on the way. He has imposed 25% tariffs on anyone doing business with Iran. We have reports of drones striking oil tankers in the Black Sea. The geopolitical risk premium is creeping back into the barrel. The reality check. Total Energies, TT, CEO Patrick Yan just threw cold water on the Venezuela savior theory. He said reviving Venezuela's oil industry will take years and billions of dollars. So if Iran goes offline, Venezuela cannot fill the gap. If you're short energy, XLE, here, you're betting on world peace. That is a dangerous bet. The lightning round. Let's translate the chaos into 3 specific trades. Rapid fire. Ticker 1, Intel. Verdict, bullish. Why? The dead cat is bouncing, and it might be a panther. KeyBank just upgraded them to overweight. They report that Intel is nearly sold out of CPUs for 2026 due to AI data center demand. The 18A chip rollout is actually happening. At these levels, the risk-reward is finally favoring the bulls. Ticker 2, Boeing. Verdict, bullish. Why? Don't look now, but Boeing just beat Airbus in net orders for the first time since 2018. They booked 1,175 planes last year. The stock is at a 2-year high. The safety crisis narrative is fading. The duopoly power narrative is returning. By the turnaround. Ticker 3, Rivian. Verdict, bearish. Why? UBS just downgraded them to sell with a $15 target. The EV demand cliff is real. And unlike Tesla, T-Cell, Rivian doesn't have a robotaxi narrative to save it. Plus, Ford just launched a new Bronco model to eat their lunch. Sell. Here is your playbook for the next 24 hours. 1. Watch the 10-year. Yields are falling in the CPI news. If $US 10Y breaks below 4.15%, that is a green light for rate-sensitive tech, like ARKK or SMH, if they can ignore the political noise. 2. Fade the financials. Do not try to catch the falling knife in JPMorgan or CUF yet. The legislative risk on credit card caps is too high. Wait for clarity from Congress. 3. Respect the metals. Silver at $90 is a breakout, not a fake-out. The Fed independence fear trade is real. Keep exposure to $SLV or GDX. The inflation war is over, but the political war has just begun. Trade safe. This is the pre-market pulse. If you like our content, remember to hit that subscribe button.